a good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, with me Sajja Sharma, and Nifty for now is just toying between the red and the green, so that flip-flop and the fight between the bulls and the bears really continues, but at least we're off the lowest point of the trading session and very close to that 22,000 mark thereabouts. But the bigger outperformer clearly is the Bank Nifty. That index is up a solid 150, 170 points. In fact, names like ICICI Bank, that's something which is pushing the index higher. SBI is also participating in the rally today, and Kotak Mahindra Bank seems to be a bit out of its slumber because that stock too is holding up comfortably in the green. To add to that, IndusInd Bank, Bank of Baroda. So very vibrant market as far as the banking index is concerned. Within other sectors that you need to watch out for, hospitals as the space is coming under pressure. That entire regularization or standardization of procedures is something which is weighing heavy on that sector. Of course, we spoke with the experts as well. Right now, this is at a bit of a proposal stage, but if it does happen, it will impact the profitability by a substantial margin. So clearly, that nervousness playing out. From the broader market separately, you have APL Apollo Tubes, which has actually moved up. All Cargo Logistics, Infibeam Avenues, these are some of the names which are in the green, but on the losing side, as I pointed out, Max Healthcare, Global Health, Prestige Estate, KSB, which is reacting to its earnings, Rainbow Children, Sonata Software, these are some of the stocks in focus. But Ajay, we were just discussing the kind of maturity that the broader market is showing despite the regulatory action is something in focus.
Correct, you're right about it. I mean, the market is not completely coming under the grip of fear. Yesterday we saw a synchronized weakness which is setting in, but the entire mid space, the small and mid cap, look at the intraday movement of the small and mid cap index today. We'll fire that for you. That was the lowest point in time, and then we recovered, almost breaking into the green. Small caps will also come up on your screen. What has actually happened today is that it's a very mature and calibrated reaction. Just because there is a nudge from the regulator, the entire space is not selling off. In fact, whatever bulk of the weakness which we saw happened yesterday. Today, as things are becoming clearer, it's a nudge towards AMCs, and AMCs perhaps may restrict some of the flows which are getting concentrated towards small caps and mid caps, and that is why the quality mid caps. Don't look at this last 7 days. Yes, there was a weakness setting in the small cap mid cap for last few days itself, but yesterday when the trigger came in, it was a weak day yesterday. Today things are taking support, especially on the technicals. If you look at 20 DMAs where the indices took support and there was a marginal recovery. In fact, this is a very mature reaction. Historically, you would have seen whenever there's a regulatory glare coming in on any part of the market, one would have expected a 2-3% kind of a downtick on the entire index. That is not the case right now. In fact, in the second half, the market breadth has improved. Quality earnings backed names like Triveni, where there are specific triggers, APL, Apollo, quality mid caps are staging a rebound. However, the area has been called as slightly frothy by the regulator. So one needs to be careful around it and not jump into the big declines which are coming. Look at that APL Apollo, days high right now. Triveni Engineering, days high. Nifty might be in a 100-point range, but quality mid caps are rebounding, and it's not a sea of red all across the market. We have Nuresh and Kunal joining us now, and Sandeep Sabharwal would also join in minutes. Okay, he's there right there. Let me take the discussion forward with Sandeep then. Sandeep, you've been you've been on the mutual fund side yourself. How do you read the commentary coming in, or the nudge or glare from the regulatory side for mutual fund community, which was seeing very concentrated flows in their small cap, mid cap schemes last few months? Regulator has called that space slightly frothy right now. And whatever happened yesterday and the first half of today, what is your take? Will it help cleanse the froth?
Yeah, hi. So I think there are various ways to see frothiness. So there is frothiness in various parts of the market. For example, you look at the IPO market, the kind of valuations at which IPOs come, they are very frothy. You look at SME valuations, or the way SME listed stocks, which too many people don't monitor, move. So I think there's bigger frothiness and fear there. I believe that as far as mutual funds are concerned, mutual funds, small and mid cap funds, are very large in size in general. Like there are some smaller ones also. And to that extent, for them, whether they restrict flows for a few days, few months, or they don't restrict, it won't make too much of a difference, because they are not going into very low value speculative stocks. where the retail investors might be getting trapped more and more as they look at market investments and they invest of their own. So, if flows are restricted into small and mid-cap mutual funds, what does the investor do? Does he stop investing in small and mid-caps, or does he look at other routes which might be riskier for them? So, I'm not sure what's the end to it, but then that's how it is. So, if that's the way the thinking process is right now, it's fine. Let's see how it goes.
The second half of the day, let's see whether further selling resumes in the small cap, mid cap or not. But that's the nature of the market. It was getting heavy on that end. Triggers may follow and market will take time to balance them out. Nuresh, Kunal, afternoon to you as well. Kunal, let me start with you. How are you expecting the new series to go by? The way, okay, 22,000 thereabout is what Nifty is, but Bank Nifty, do you see some more participation? It has been lackluster last few series.
Yeah, it has been lackluster, but this series, at least in the second half, we saw some bright signs coming across. We saw HDFC Bank showing signs of recovery for the first time, and after that very sharp and if I can call it a brutal selling for the stock, where it fell from 1650 levels to sub 1400 mark for itself. So this comes as a positive end for the markets, that maybe you might see the stock getting into a stable territory. ICICI Bank making a strong comeback. You've seen Axis Bank also showing signs of recovery, just about the 1050-60 mark for itself. So which means that there is probably an indication that maybe the private sector banking end, which was a major concern for the markets, that end could probably get a lot more balanced this time around, and it may not struggle or get into more of a scattered price action. The PSU banking stocks, of course, have been doing exceptionally well. Even if you look at this last few days of correction for the indices, the PSU banking lot, especially the formidable ones like Canara Bank, Bank of Baroda, SP, etc., these stocks have corrected marginally lower as compared to rest of the PSU pack. So that itself tells you the kind of depth these stocks have had. So I believe on the back of this, there could be a very strong case that maybe Bank Nifty can stand to outperform.
And the Bank Nifty is outperforming right now. But Kunal, a quick word in terms of the rollovers. How is that panning out? Because of course it's a day expiry, but separately the PCR was quite comfortable. The long position was getting extended. Is that something which is continuing into March as well?
Well, put call ratios are intraday ratios. So on expiry day we generally don't take too much heed towards the ratios. But I think on intraday basis it was almost at 0.5, 0.6. When the market started, and those are 0.5 and 0.6 are extremely oversold territories for put call ratios, and that generally indicates that maybe the market is getting into an oversold territory. Rollovers is very important because so what we also tend to see is the rollovers and the sentiment behind the markets for the current expiry as well as going to the next series. And as I mentioned, for example, that there has been a complete change of stance from the market internals. Right now, mid caps, small caps are struggling. Large caps are the ones which are still holding their fort, except for the last maybe couple of days of price correction. But when you look at this largely over the last 2-3 weeks, specifically going into the Feb series, there has been good recovery for many of the large cap names. So I would probably expect that the rollovers going into the next series should be on the lower side, especially on the stock specific and the ones which have been underperforming. For example, the likes of Maruti, which was a huge underperformer for the last so many series. I think that stock can probably see some bit of unwinding of short positions, and same would be the case with many of the private sector banking names.
Naresh, getting you into the conversation, there's a large deal that has happened on Biocon right now, and the other one which is showing a bit of a spike on futures is Berger Paints. Any thoughts on these two charts?
So Berger Paints, I'll be careful because if you look at the March future, the stock is trading at a discount to the cash prices by a big margin. So the spot prices are at 585, 590, and the future prices are at 545. So that's a huge margin. That generally indicates not so a positive thing. So not a buy here. Actually tough to short also because you cannot short it in futures. So would avoid Berger Paints as such as of now.
Sandeep, how are you looking at hospital space right now, especially in light of what Supreme Court has actually aiming at getting? The proposal is that a lot of procedures could be brought under the standard norms. There's a big differentiation right now. Private hospital, the same procedures versus the public ones. You had exposure in Apollo for some time now. You understand that space. What's the call? Can they fall? Should we get into that fall?
I think regulation in this space possibly could be something which was long in coming because of the fact that these hospitals are able to charge anything which they want, and they can randomly charge any client, any customer very differently from a second customer, and so on. So I think that's what has led to this kind of thing, and the disparity obviously is very huge. So my guess is that with the Supreme Court nudge, there will be something which will come about now, and that could have a negative impact on margins. And these stocks have moved up also very sharply and have outperformed significantly. So I would think that people should be cautious in these stocks at this stage, because any such move, if taken, could lead to a immediate sharp downside.
Spoke with a clutch of experts in that space and including hospitals around this matter. Let's get some of the slices of those conversations.
When it comes to treatment rates, let's look at across three different segments. So one is cash payers, or the self payers. So, and then the private insurances, and third is the government schemes like CGHS, ECHS, and ESI. So when it comes to cash or self payers, it is usually, if comparison to private insurance, private insurance is 15 to 20% lesser than the self payers. And then from the private insurance prices, government rates are even beyond 15 to 20%, much more cheaper. So somewhere around 30 to 35%, it's cost less when it comes to CGHS rates if a person is paying from his own pocket. Now, it's important to also look at how much the volume of the CGHS, is being derived in the hospitals. So I think regulating, the rates would also require regulating the private insurance rates. So hospitals right now, yes, certain tariffs are being provided by the private hospitals, but a lot of proportion of hospital business also comes from the private insurance space. So regulating the private insurance rate as well as the hospital rates would be, a challenge across different states and across different treatments. But if it does implement it, yes, it would have certain impact. But yes, it's still to be seen in what manner it could be implemented.
You see, the Clinical Establishment Act, which Supreme Court is quoting, provided these 2 points which you mentioned. One is that hospital is expected to display the rates, their own rates. And second one is that central government, along with the state government, must fix up the range, the rates in the range, not one particular rate, So that means suppose for one procedure, the range could be 100 rupees to, let us say, 150 rupees, depending on the type of the hospital. Now, unfortunately, these rates have never been worked out for past so many years. Rather, they have never been worked out, because costing of medical procedure, I will not say it's very easy.
All right, Sandeep Sabral is still with us. Sandeep, I wanted to ask you one question on the March seasonality factor. A lot of traders, investors in this month actually book profits in their loss-making position to take advantage or set them off in profit-taking positions. Is it a given or it is very random? Do you think it may happen this March in an accelerated fashion?
It might be very random, because that would happen in the later part of March, and some people would do that, especially who have very high profits and they want to just set it off by booking losses. And that's also sometimes correlated with the general view. So if people expect that as it is, there could be correction going forward. So I think and that view gets reinforced, then we might see more selling. I think it varies across the year, so it's not a given as such.
The other stock we need to mark is Swan Energy. Look at the stock on an intraday basis. The stock has shot up right now, almost 750. At day's high, 3.5%. The news came in half an hour back that they have actually managed to raise almost 4,000 crore in the QIP. 3,300 odd has gone to Swan Energy and 700 odd has gone to the subsidiary, the defense subsidiary. Data will just come up. Oh yes, that's the data. Who are the institutional investors which have come in? Quant has come in, LIC has come in, SBI Life, Leading Light Fund and Dovetail India. These two entities I am not aware of. Appears to be some funds, but SBI Life, a big insurance company, LIC and Quant Quant increasingly is being seen as the stock picker mutual fund, almost 60,000 crore assets under management. And LIC, of course, is the largest financial institution, domestic one. Nuresh, you've been tracking Swan for some time. How do you look at the charts at 745?
So don't track it as closely, but if you look at it, the stock has had a superb run in the last 4-5 months ever since it broke out above the 330, 350 mark. At current levels, the risk reward is not, say, convincing enough to take a long. Rather, time to book some profits. The good news is we are seeing fundraising, etc. done. Or keep a trailing stop loss below 700. Till the time it holds above 700, maybe the momentum could continue. But time to ideally would be to book some partial profits.
In the meantime, just taking stock of some of the other buzzers as well, you have Biocon, which is in focus, as well as Gujarat Gas, which is perking up. Do you have a view on either of those names, Sandeep?
Sorry, which ones you mentioned?
Gujarat Gas and Biocon.
No, not tracking them closely at all.
Okay, let me toss it across to Kunal then, because I'm sure he's tracking both of these names. What does the chart check suggest?
So both of them are attractive. In fact, Biocon, I did a chart check yesterday on the Chartbusters, mentioning that the stock is completing a major retracement as well as a major period of volatility. So almost a 10 to 15% volatility for Biocon seen in the last 3 attempts over the last 2 months, where the stock has been extremely volatile. But when you look at this with a slight medium-term time frame, say a stretch time frame of 6 months, 9 months, and the stock recovering from the 200 levels, it indicates that there is a bigger trend in the making for Biocon. So I would believe that at current levels, it could be a very good zone to go for a buy at current levels for Biocon. And my expectation is that the levels of 300 should be breached in the next phase of the rally. So with a time frame of say 1 to 3 months, traders could look at least a 10% target for the stock. Gujarat Gas on the other hand, so I think all three names, Gujarat Gas, MGL, IGL, I think all three of them are looking very attractive. They've completed their a minor phase of correction. I think a 7%, 8% broad correction has happened into these stocks from their 2-week swing highs. So I think that also puts the charts back again at a very interesting level for themselves. So I think closer to 560, 561 Gujarat Gas, we could be looking at the stock getting into a strong demand zone. And if it recovers, then we could be looking at 600 plus as an immediate target.
Look at the small cap and mid cap indices intraday now. It's important to see the pullback which is actually happening. Mid cap index has already broken into the green, and the small cap index has also broken into the green. So that's the case we are talking about. Very sharp intraday recovery, I would say. I want to talk to you about, Sandeep, one space, the pipe space. You remember in the COVID time, there was one pipe stock which went up many times, or even after that, Maharashtra Seamless. But after that, APL Apollo, Mun Industries, many other pipe companies are actually doing well, at least the numbers are showing. Any pipe company, any thoughts on the way, is it Jal for Null or is it oil and gas? What are the triggers the pipe companies are in focus?
Yes, I think the triggers have been twofold. One, the overall, there had been a pickup in the oil and gas investment, that is globally. So I think that led to some increase in demand. And then the government's Jal Se Null scheme, I think that created a huge impetus in terms of demand, and many of these companies got huge orders and sustained improvement in profitability. Now we've seen that most of these companies, be it Maharashtra Seamless, Jindal Saw, or if you come down to the plastic pipe companies, I think they have reached a level where valuations seem to be pretty high. So I think, and the momentum of growth also could slow down over the next couple of years. So I think to that extent doesn't seem to be an attractive sector right now for new entry.
Point taken. I just wanted to put on board a couple of these auto stocks as well. While M&M is actually doing very well for itself, it's Bajaj Auto which is coming under pressure. Bajaj Auto might of course have that technical factor that today is a record day for that buyback as well. So people who were holding out might be liquidating today. But within the entire auto pack, what's the view, Sandeep? Because the street is clearly divided. The actual factual data suggests that there's a bit of a slowdown in terms of retail sales. EV isn't picking up, but the perception that the market has and the opportunity that brokerages, etc., are talking about is at the other end. How should an investor approach it right now?
I think auto sector should be looked at constructively because one, valuation, if you among the top tier auto names, if you see of TVS Motors, the valuations of the other companies are not yet excessive. they have tailwinds going for them in terms of input prices being under control. Secondly, there's people are moving up in terms of the value chain. So even if volume growth is 7-8% or thereabouts, the value growth could be upwards of 15%. And if, as is being predicted, the El Nino ends, we get a La Nina year combined with post-election demand boost. So it's a decent sector to be in for investors. So I would think that there's nothing negative per se, except for the fact that if stocks zoom up in a straight line, always they'll give a correction, and that correction has to play out.
Okay, Sandeep, on that note, we let you go. Appreciate you making time and speaking with us today. So that's the view on auto sector as well, quite constructive. Nothing that should materially put you off when you look at that sector. In the meantime, just tracking some of the stocks which are buzzing around. Pull up a Suzlon Energy, that's suddenly spiked up. Greenlam Industries is the other one in focus. There was a big India Wood exhibition also that happened, and the commentary from there seems to be positive, at least for the plywood industry. Look at the big spike on that one. Galaxy Surfactants is the other one that I'm watching out for. On the losing side, Welspun Corp is coming under pressure, and ditto can be said for Jyoti Labs as well. At least those are the big movers in the last few minutes. But at 3 o'clock is the time when we'll also start seeing the adjustment of the MSCI flow. So we'll quickly get Somit to join us to talk to us about which are the stocks which are likely to see big inflows and outflows on account of the MSCI readjustment, because usually we do see that big move happen anywhere between 3 to 350. But in the meantime, let me take this opportunity to take the closing trade ideas from our chartist. Naresh, you go first.
So continuing with the same recommendation, which is Tata Communications, that has been holding on nicely in the current market conditions. Till the time it holds above 1900, remains a buy at current levels for a move to new all-time highs.
You, Kunal.
So Hindustan Copper is something which is looking very charged up today. So quite a strong momentum for the stock coming by, and a breakout also on the early chart. So would look to trade the stock on the positive side.
Yeah, very good momentum on Hindustan Copper, but time now to slip into a very short break. But as promised, on the other side, we'll get Somit to join us and talk to us about those MSCI flows. Welcome back. Well, the Nifty has again dipped into the red, so a sharp sell-off is what we saw in the last few minutes, but let's not make too much of it. It's been fairly volatile, but at least the good news is in the broader markets, wherein we have seen quite a bit of recovery from the lows of the day. The mid-cap index is up 1.3% at the highest point of the trading session, and the small-cap index too at the highest point of the day. But as promised, let's welcome on board Somit to tell us what should we expect with respect to the MSCI readjustment and what kind of inflows and outflows we should work with. Hi, Somit.
Well, if you see the MSCI adjustments announcements that were announced earlier, now the adjustment regarding the same, which means the inflows and outflows regarding the same, are expected to happen today in the last half an hour of trade. Now, India is expected to see an inflow of close to $1.2 billion, and India's weightage in the MSCI index is expected to increase to an all-time high of 18.2% from 17.9% earlier. Now, when it comes to the global standard index, is the stocks like PNB, NMDC, BHL, Union Bank, and GMR Airports which are included, and these stocks could see an inflow of anywhere between 148 to 187 million US dollars, which is nearly 1.4 to 3.3 times that 20-day average volume. Apart from that, a host of stocks would see an increase in their weightage, which include the list of Zomato, DLF, MRF, and these stocks could see an inflow of around 40 to 86 million US dollars. And lastly, a couple of stocks that could see some outflows, that is Geo Financials and Container Corp, because their weightage in the global standard index has come down, and the outflows could be in the range of around 23 to 73 million US dollars. Now, when it comes to small cap indices, if you see the inflow amount is not much higher, but the volume action could be much on the higher side. Like for Healthcare Global, 2 million of inflows is nearly 3.2 times its 20-day average volume. Similarly for Jupiter Life, NetWeb Tech, Dhanuka Agritech, Ethos, these stocks have been added. Inflows are in the range of around 2 to 3 million, but that is nearly 1.6 to 2.8 times the 20-day average volume. While stocks that have been excluded from the small cap index are Torrent Power, Barber Connection, and Prestige Estates. Outflows would be anywhere between 2 to 24 million US dollars, which is nearly 1.9 to 2.8 times the 20-day average volume. So keep an eye out for these stocks in trade.
So So much for that. We also have Deepak Shenoy, the founder at Capital Mind, joining us on the show. Deepak, hi, good afternoon. Good to be speaking with you. Before anything else, tell us what transpired in that meeting with the finance minister. I understand you were part of that meeting where the finance minister met the fintechs. What really came out of it? Was Paytm top of heap?
No, we were actually more about the problems faced by the fintech industry in general, from a perspective of what could be done to improve the situation. Some of them involve, a deeper consultation with the RBI. Some of them are issues around how the taxation laws are created. Some of them were ideas about new products. I think the idea here was to an open communication on what we can do as a country itself to kind of foster more fintechs to kind of help in the progression of on the financial side of things, in terms of inclusion, in terms of maybe some of the regulatory bodies are or maybe the enforcement is action is perhaps needs more context around how certain technology elements operate more than the issues. Of course, there's no questions about any, any factor that says, give us leeway because you're fintechs or anything like that, but more like fintechs pose like a different challenge or have different challenges. And sometimes the traditional, human-led, say, versus tech-led architectures, may not appreciate the scale and the change of some of these things. So the older laws which kind of exist need to be addressed. But it was very progressive in the sense of
Deepak, pardon my curiosity. Deepak, pardon my curiosity, but how come you're spending so much time on this issue of fintechs these days, writing about it, expressing your mind, spending time with the founders, as much as accompanying them to that meet? Do you have reasonable exposure towards fintech, being a thoroughbred capital market guy, the listed space, or are you converting your company gradually to fintech? What's the secret here?
Yeah, we are a fintech. We use a lot of technology in everything we do. We have technology-based execution of our strategies. We have technology-based investing technology itself, which discovers stocks in the first place. So we use a lot of that. We're using a lot of AI and ML to understand the behavior of stocks, the behavior of press releases, the behavior of annual reports, and therefore I think we also qualify as one. Though of course this was more, other regulators. There was not so much SEBI in the picture and all that. But I think in general we are appreciative of the challenges that fintechs face in general. And this is a conversation with the government. In fact, the government itself is saying, why aren't you talking to us? Why do you guys only talk on Twitter? Talk to us and we'll help you come up with solutions. सिर्फ ट्विटर पे rant करोगे तो फिर क्या होगा? So it makes complete sense to me. I think not that I'll stop ranting on Twitter, but constructive dialogue is always useful.
What you're saying, you haven't stopped ranting on Twitter because that is one of those mediums, right?
It's a free world out there.
Absolutely, and free speech is what is the benchmark of Indian democracy, so you can't let that go. But okay, let's just focus and talk about markets as well. Deepak, we're all wondering and thinking what's going to happen with the hospital space. Regulation took a knock when it comes to the entire fintech space. There are regulations coming on small cap, mid caps, and then there are probably regulations coming in on hospitals as well, with that standardization of pricing of some of the procedures. Do you think really that is something that could be employed and deployed by the government? And if yes, it would be a very sharp hit to the profitability of all these hospital companies, right?
Actually, I don't think so. I think it's the opposite. Hospitals will therefore gravitate towards that price and not try to optimize and reduce prices. This is an unfortunate consequence of trying to rein in prices, is you cannot bring those prices down significantly from there. I'll give you an example. Stents. When the government introduced the law that stents you cannot charge more than X amount for stents. Did the cost of stenting procedure go down? Initially it did, but now there is almost no incentive to improve cardiac stents or other stents as well. The pricing of them meaningfully, because the government set up the max price, and that's where you're going to go. I don't think this is going to be progressive from that perspective, of course, I'm not the expert, but I'm looking at from the economics part of it. If you set pricing as maximum, that becomes the minimum price. Once the Pakistan Stock Exchange said prices can't go down, for 45 days prices didn't go up also. They stayed at this exact same price. So setting up these minimums and all that stuff stifles the need to actually bring prices down. So we might have a counter impact of some of these. I understand the sentiment behind it, but I think control is not the answer. It may be a procedure that says control for a while prices are high, but eventually let it go. It will eventually result in better numbers. And what's to say tomorrow that inflation does not come in and say 5% inflation? In about 5 or 6 years, you're talking about 30 to 40% higher prices. Nobody will be able to do this, run a hospital business, if you had max prices on everything.
How are your latest additions to your funds looking like? Which areas have you nibbling in, you've been reading and researching about, or would buy on declines from here?
So actually, interestingly, we'd like to buy both on. I like to buy more when the stocks go up rather than just on declines. But we're still very positive on a few themes that are very specifically India because of the infrastructure changes, because of the focus on a lot of Indian local domestic improvements. We're adding more players in logistics, for instance, that allows us to kind of participate more or see the urban and rural consumption divide kind of narrowing down over a period of time simply because of accessibility, roads, rail, and cargo infrastructure. We're also adding a few players. I mean, we've added we have very little changes from last time, but I think what we've done is we've added a couple of special situations where, again, Indian manufacturing spaces where we're targeting some of the MNCs in India are trying to exit their portfolios, so that's not a good sign, or rather reduce their promoter holding. But there are others where, because of a change of management, they're going to have to give open offers at higher prices. So some of the new additions have been special situations for more shorter terms there. But I'm still focusing on a few themes that we've focused on for the last 2 years: domestic consumption, financialization of the economy, including investment technology companies in the space, and import substitution through local manufacturing. So I think that is something that we're from semiconductors to a bunch of players around infrastructures, around domestic manufacturing, auto ancillaries. We've continued to add those names. I haven't honestly changed the portfolio too much. Some of the small caps have become mid caps, thankfully, but that's the only, the mix has changed from what was small cap plus large cap portfolio to more small plus mid plus large.
Taken, but since you're talking about consumption, actually let me bring on the conversation that we have with the management of V2 Retail, because that's a conversation I think my colleague had with the management in terms of how the retail space is doing. I'm sorry, was it V-Mart or V2 Retail? I'm a bit confused, but let's go across to my colleague Aishwarya, who's joining us with the conversation with V-Mart Retail's management.
What is good, what is undiscovered, what is valuable always gets more attention and always gets more and more player. And there is definitely mammoth business out there in the value retail space, in the value fashion retail space. Because in India, with 130 crore of population, almost 85% of the population is someone who only can afford value and are a great propagator of value. And when that Bharat consumes, and they want to consume in the right environment, they want to consume with the right product, they want to consume with the right value and for the right product quality.
The average basket size in tier 2 cities would be definitely different from a metro city. From that perspective, if you could talk, has that grown? Have you seen any sort of incremental growth there?
No, I mean, definitely, at what period are we looking at this? Definitely the smaller town, which is the tier 2, tier 3 towns. We have also got a survey now and already released by the Niti Aayog, and so there is definitely a lot that the tier 2, tier 3 towns has grown. But still, compared to a metro or compared to a tier 1, definitely the basket size is lower. The average selling price of the products are lower, and the potentiality for the customer to buy at a time for a large value is much more lower than what a metro would do. So there is our average basket size is around 800, and that's what I think is sweet spot for the tier 3 towns. But in certain tier 1 towns, we also see basket size up to 1,500 rupees.
So in terms of the next year, 2024, I mean the rest of the year for 2024, any sort of guidance in terms of expansion, store expansion, same store sales growth, if you could give us a sense of that.
No, I think we believe in India's story, we believe in Bharat's story, and we believe there is more potential. There is a lot of towns and cities where we are yet to go. There are a lot of towns and cities where we have 1 store or 2 store, we can penetrate and grow more.
Okay, so that's a conversation with V-Mart Retail. But Deepak, what's your view on this entire SEBI coming down on the flows into mid-cap and small-cap? Has been making a lot of rounds, making a few, ruffling a few feathers, making a few people nervous. What's your take?
So I think intention is good, obviously. See, they've seen what happened at Franklin when the underlying market gets very illiquid. Then some people who have advanced information of the markets becoming illiquid will exit their investments ahead of everybody else, and then other people suffer. They've addressed it with something called swing pricing, where when the market becomes illiquid, you give a lower NAV to a person who's exiting now, simply because you know that exiting will cause the prices of everything else to fall, and therefore the illiquidity discount in a way is up to 1 or 2%. I think 2% is the maximum you can give as a discount, and that to above 2 lakh rupees. Now, they don't have such a structure for equity funds. We also know that small caps have gone up quite a bit. I think that's fear of this gone up quite a bit is just that, they've done 50% in the last year or something. To be fair, from 2019 to now, they have grown their earnings 3x, and they have also seen prices go up 3x. So it is not like the earnings are very different from 2019, but today sounds like a little bit of a scary enterprise. But here is where the problem comes. If you attempt to you cannot, for instance, gate exits. You cannot say that you can't exit. You have to provide everyday exits in open-ended funds. The best thing you can do is stop fresh entries, or tell them that you can't invest more than, say, 10,000 or 20,000 rupees in an SIP mode. That a lot of funds have also done. But there's still the 5th largest fund in India is by AUM, active fund by AUM, is a small cap fund. The largest fund in India by AUM, actively managed, non-ETF, non-index fund, is a mid-cap fund. So you end up with large amounts of AUM following in these companies. If you look at small caps, the definition of small caps is between 7,000 and 21,000 crores. As of, I think, July to December 2023, the classification wise. So if you have a company whose average market cap is 15,000 crores, and you buy 1% of it, that's a very large number for a mutual fund to buy. That means you have a 150 crore exposure. Now, the largest small cap fund has 45,000 crores in it. That 45,000 crores will have, let's say, 65% of small caps, which is roughly about 30,000 crores. Now, they have to buy 200 companies with 150 crores each, owning 1% of each company, in order to make up that 65%. So they have a well spread out, mostly well spread out kind of investing footprint. And okay, a few of them will have lower circuits for a while. That's fine. I don't think all 200 small cap stocks will end up having circuits all the time. Some circuits will be there. Some stocks will be difficult to exit in case of a downturn. So what mutual funds should do is obviously create buffers by having 20 to 30, 35%, up to 35% you can have it as more liquid instruments. Could be large cap stocks, could be government securities, could be something more akin to cash. But I think that still is possible to do by small cap and mid cap funds, is to keep these buffers. However, I still don't feel they'll help, because no matter what happens, when a market goes down, there is illiquidity, there will be fear. And without swing pricing, the remaining investors will always suffer. So they will, I think this is a good intention, but the sources of what funds can do are very limited. because they cannot be allowed to tell people that they cannot exit. If I put an exit order today, within 3 days, I need to get money. Yeah.
Okay, no, that's the right way perhaps to look at things. But let me just get Nuresh also in the conversation and talk to him about some of the price volume buzzers. Torrent Power, and we should pull up the graphics on the screen. That's seen a breakdown from the head and shoulder chart pattern, has hit a 2-week low on an intraday basis. There was a positive news flow, but we are not seeing that kind of reaction on that stock. Torrent Power will come up for you on the screen, and the graphics to put along with it. Hindustan Copper, the other price volume buzzer, the breakout has been seen from the cup and handle chart pattern, surpassed the 20-day moving average. So that stock is in focus, and it was one of Kunal's recommendation as well. And Aditya Birla Fashion, it's formed a bearish candle following a shooting star candle, and it's taken resistance at 20-day moving average on a monthly time frame. Nuresh, Torrent Power, Hindustan Copper, Aditya Birla Fashion, anything on the charts that you would want to discuss?
So Hindustan Copper and ABFRL is what I would like to discuss. So Hindustan Copper has been in a strong uptrend till the time it holds about 245, 250 levels. The momentum remains and could continue higher. ABFRL is an interesting case, positively biased here. The stock has gone nowhere for the last almost 8 to 10 years. In the near term also, the stock has multiple times corrected from 240 to 50. But 200 to 225 has been a strong support. So at these levels wherein the stock has gone nowhere, the risk reward is good for a reversal from here, and could slowly and steadily go back to 260 to 300 levels.
Take coming in on some of these other big buzzers, just taking stock of what's happening in the markets right now. The Nifty has taken a bit of a shot up, so maybe there is some fight from the bulls that the expiry should happen above the mark of 22,000. Let's see what the Bank Nifty is up to, because that index was clearly outperforming throughout the trading session. There were gains comfortably of around 200 points. That's actually increased further. So 46,250 is where we are at. Berger Paints, I think in F&O that's shot up quite strongly, while the cash rates might not. Okay, so even the cash rates have actually managed to perk up quite a bit. Hindustan Copper, as we were pointing out, is doing quite well. Shriram Finance, which is the latest entrant in the Nifty 50, will happen with a bit of a lag, but nonetheless getting there, is also in focus. Gujarat Gas, which has cut the prices in the Morbi region so that they're able to capitalize on more volumes and fight against propane, is also in focus. So some of these names definitely on the radar. But Kunal, if I had to ask you, from the hospital pack, which is clearly coming under a lot of pressure today, which are the stocks that you will use this dip as a buying opportunity?
So I think Apollo Hospital would be the first one to buy. I think even Max Health is something which I was earlier bullish on. I think a few weeks back when the stock was closer to the 665, 670 odd mark, and I think I'd mentioned a target closer to 800 levels. So it's done pretty well for itself. Now from those 800, it's come back towards 780, 785. So a modest correction at play for Max Healthcare. That's, I think, another stock to look out for. And even Apollo Hospital, the stock, in fact, at a point when I think in the second half of the month of January, when the first phase of correction started off for the markets, that was the time when Apollo Hospital was actually making new highs for itself every time. I think 6,000, 6,200, even 6,300 plus levels is where the stock had risen up towards. So I think now on the way down, closer to that 6,000 levels could be a good point to re-enter the stock.
Okay, so that's the latest coming in. Okay, so we have the cabinet decision underway, and the Railways Minister is talking. Let's cut across to Mr. Ashwini Vaishnav.
एरोप्लेन में करीब 8,000 10,000 के आसपास चिप्स लगती हैं, तो हर एक क्षेत्र में, जिंदगी के हर क्षेत्र में आज प्रैक्टिकली सेमीकंडक्टर चिप्स का उपयोग होता है. तो भारत को एक बहुत बड़ा मैन्युफैक्चरिंग हब बनाने के लिए और कई क्षेत्रों में आत्मनिर्भर बनने के लिए सेमीकंडक्टर जो फाउंडेशनल इंडस्ट्री है, आज उसका बड़ा महत्वपूर्ण फैसला लिया प्रधानमंत्री श्री नरेंद्र मोदी जी ने. जैसा श्री अनुराग ठाकुर जी अभी बता रहे थे, सबसे पहले देश में प्रयास हुआ था 1962 में, फिर 1980 में प्रयास हुआ, 1984 में प्रयास हुआ, 2005 में प्रयास हुआ, 2007 में प्रयास हुआ, 2011 में भी ट्राई किया. जब नीयत और नीति दोनों साफ होते हैं, स्पष्ट होते हैं, तो सक्सेस मिलती है. आज प्रधानमंत्री श्री नरेंद्र मोदी जी के नेतृत्व में संभव हो पाया कि भारत की पहली कॉमर्शियल सेमीकंडक्टर फैब आज अप्रूव हुई. बहुत जल्दी इसका भूमि पूजन होगा और जैसा आपने माइक्रॉन के केस में देखा था, विद इन 90 डेज एक्चुअल कंस्ट्रक्शन आरंभ हो गया जमीन पे, वैसा ही टारगेट लेके चलेंगे। 100 दिन के अंदर अंदर इस प्लांट का कंस्ट्रक्शन आरंभ करेंगे। साथियों, जो भारत का सेमीकंडक्टर मिशन प्रधानमंत्री जी ने 2021 15 दिसंबर को कैबिनेट में अप्रूव किया था, उसके तहत एक प्लांट माइक्रॉन का ऑलरेडी कंस्ट्रक्शन में है, एक ये फैब अप्रूव हुई, साथ ही साथ 2 और बहुत महत्वपूर्ण प्रोजेक्ट्स आज अप्रूव हुए सेमीकंडक्टर यूनिट के। हम सब जानते हैं नॉर्थ ईस्ट पे प्रधानमंत्री जी ने जो फोकस दिया अपने करीब 10 वर्ष के इस कार्यकाल में, 50 से अधिक बार नॉर्थ ईस्ट गए, नॉर्थ ईस्ट में कनेक्टिविटी की क्रांति लाए, ऑप्टिकल फाइबर हो, रेलवे हो, हाईवे हो, एयरपोर्ट्स हो, और आज प्रधानमंत्री जी ने अप्रूव किया है नॉर्थ ईस्ट में आसाम में पहला सेमीकंडक्टर यूनिट, देश का तीसरा सेमीकंडक्टर यूनिट, आसाम का पहला, नॉर्थ ईस्ट का पहला सेमीकंडक्टर यूनिट। ये यूनिट साथियों टाटा सेमीकंडक्टर असेंबली एंड टेस्ट प्राइवेट लिमिटेड TSAT ये कंपनी लगा रही है। 27,000 करोड़ रुपीस का इन्वेस्टमेंट होगा। बहुत लार्ज स्केल पे इसमें सेमीकंडक्टर मैन्युफैक्चरिंग होगी और दुनिया के बहुत बड़े ऑटोमोबाइल मार्केट में मेड इन इंडिया, मेड इन असम चिप्स जाके लगेंगी। मैं नाम नहीं ले सकता, लेकिन बहुत बड़ी ऑटोमोबाइल कंपनीज में ये चिप्स लगेंगी। ये चिप्स, इस प्लांट की कैपेसिटी भी बहुत बड़ी कैपेसिटी है, 48 मिलियन चिप्स पर डे। 48 मिलियन यानी करीब 4 करोड़ 80 लाख पर डे।
Okay, so that's the latest coming in from the government with respect to the cabinet announcements. But just take a look at Berger Paints, and if we can, let's try and pull up the futures as well as cash simultaneously, because there's a bit of a gap. You have, of course, the cash market at around 620 rupees, and let me take a look at what the futures are up to. I think that level was a bit higher than that. I'm not sure exactly actually where the level was in terms of the futures. But Kunal, is there anything interesting or arbit, if at all, in this name and overall on the market? What would be your recommendation right now as we are wrapping up the series this month?
So yeah, the only strange factor was the futures went into circuit first,
okay,
and the cash segment went to circuit later.
Okay.
So that's the only change. But I would probably believe that you can probably blame it on the expiry day, and I think that's one of the major reasons why the action is more inclined towards the F&O segment rather than on the cash side. But I think now even the cash segment has gone to the circuit filters for Berger Paint. But on the expiry front for both the indices, I think it's been a remarkable recovery for both the Nifty and Bank Nifty. And remember, after yesterday's sharp correction, this is a very strong pullback for both the indices, Nifty and Bank Nifty, coming back about the psychological levels, 22,000 as well as 46,000 respectively for both the indices, Nifty and Bank Nifty. I think that itself tells you the story that it's been a very volatile series, but hopefully the end of the Feb series indicates that maybe the rollovers could be on the much more positive side.
Okay, that's the take coming in. But on that note, Naresh as well as Kunal, we let you go. Thanks so much for making time and speaking with us. Looks like it's going to be at least a strong positive close for the markets on the day of the expiry at the end of the month. The month hasn't been that great. Nifty is up almost 1.5% only for the month gone by. Though if you look at the series factor, of course, the data is a lot different. The small cap and mid cap indices for the month has actually been in the red. But time now to take it across to Winnie for the market close.
Absolutely. Month was not exciting, but today's day surely managing to close on with a positive note for the Nifty as well. Look at it, 100 points up, and yes, that's where it's going to be closing at, about the 22,000 levels, up 0.5% in trade. Sensex 2 trading with a positive bias and going to be closing on the positive note, up 350 points and more than that. Let's look at the broader markets that we've just pulled up in terms of the Nifty mid cap as well as the Nifty small cap. Both of them ending on a positive note as well. Clearly, yesterday we had seen that underperformance coming in. Even in the morning, there was a bit of an underperformance from the broader markets, but by the end of the day, closing quietly positive and on. the positive side, better than what the benchmark indices are performing. Other than that, advance decline ratio that we're seeing clearly in the favor of advances versus decline, so keeping an eye out on that one as well. Nifty Bank managing to close on a positive note. Let's pull up some of these advance decline ratio clearly in the favor of advances versus decline, and overall individual names, hotel stocks were clearly under pressure. Berger Paints managed to hold on to some bit of a green there, strong gains of 9% as well as metals, PSU Bank's financial services among the top sectorial gainers, while media and IT clearly saw a lot of pressure there. Shriram Finance, after the possibility of the entry coming in into Nifty 50, Shriram Finance was a stock that was passing in trade today as well. Geo Financial Services, among other names that have been in focus on the Nifty rejig. So yes, that's how the market is closing like on a positive footing today at least.